Hello and welcome to the Mutual Fund Show. My name is Neeraj Shah. The next 20 minutes, we'll talk all about funds. And in this case, we have re-invited, or rather, we've gotten Crisil back again on the show after a hiatus of about 2 or 3 quarters to talk about the fund rankings that they come out with at the end of every quarter. This is, of course, a bit dated. So we're doing this in the month of May. I presume it's for the previous quarter. But the conversation with Piyush Gupta of Crisil would be, what's the basis of the rankings that they've given to some of the funds in some of the categories. Now, do note, viewers, that they come out with rankings on funds of almost 13 or 14 categories on the equity side. Today, we're doing the equity episode, then we'll do the debt piece as well. But the idea is we've chosen 3 or 4 categories because obviously we can't complete all the categories in the limited time that we have on the show. But Piyush, great having you. Thanks so much for joining in. I hope all is safe.
Thanks, Neeraj, for having me here, and all fine at our end. Hope everything is fine at your end.
Yes, indeed. Everything is okay. And flows seem to be coming back, so to say, with a bit of a predictability, if you will, which is actually good news from mutual fund managers' perspective. But let's talk about what is it that our viewers who are largely mutual fund investors should watch out for when it comes to some of the categories and some of the funds within. Can you, just before we get to the categories, Piyush, can you explain the basis of the rankings? How is it that you arrive at the rankings that you guys arrive at for any category?
Yeah, so on an equity side, what we have is we look at multiple parameters. So the focus is both on performance of the fund, along with the risk which is measured using volatility, plus the portfolio-based parameters. So it's a combination of performance and portfolio-based attributes, which define the final ranking of the funds. When we look at equity categories, given that the focus is largely on the performance of the fund, there is a higher weight given to the performance parameter. And on the portfolio side, we look at factors like concentration risk, liquidity risk in the portfolio to measure the overall ranking of the fund.
Okay. And just so that our viewers explain, actually, let's kind of take it piece by piece, and then we'll talk about some of the nuances there. Let's start off with the Flexicap category, if you will, Piyush. Okay, viewers, so here's the deal. We've chosen 4 categories: Flexicap funds, large cap funds, large and mid cap funds, and Contra funds. These are the 4 categories that we've chosen. Sure, we have chosen a mid cap, small cap, but we've gone with these 4. Maybe the next time around, we'll choose some other categories. But for this show, we've chosen these 4 categories. And what I would request our guests to do today, viewers, is tell us what to watch out for when it comes to these categories as well, within that, in a nutshell, and then talk about the funds within that category. So Piyush, let's start off with the Flexicap category. For somebody who is looking to invest or is already invested in the Flexicap category, what is it that should be watched out for when it comes to this entire category?
Right. Flexicap, now this is a category which is kind of come in a new, with a new nomenclature. Earlier it used to be called as multi-cap category. In the interim, we had a change in the definition of multi-cap, and then we had a reintroduction of Flexicap. So essentially, these are the funds that we have ranked in this category are largely the erstwhile multi-cap funds. And the focus of this category typically is generate returns for the investors by taking active calls across market capitalization. So if the fund manager believes that going forward, large caps are going to do well, or maybe mid caps are going to do well, they do take those active calls, allocate into these different capitalizations depending on their view on the market. And the ones who are able to kind of take those calls correctly over a period of time, you'll find the funds appearing on top as far as the performance are concerned. Having said that, stock selection is a key factor, irrespective of equity category that you look at. But in case of Flexicap, allocation also plays a vital role when it comes to the overall performance of the category.
So allocation plays a very vital role. And has that shown a dramatic change from what it used to be to what it is currently? And does it give you the confidence that maybe performance or the alpha that the fund can generate would be better? Because I'm guessing it will change with time, almost every single year.
Yeah, so in fact, when we look at last 3 years, there has been a shift in the allocation of flexicap funds between large cap versus mid cap and small cap. Largely to do with the fact that in the recent 1 year period, it's the mid cap stocks and the small cap stocks which have done better than large cap. If you look at last 1 year performance, specifically the financial year, last one financial year, large caps have delivered a return close to about 70 odd percent. But when you look at mid caps and small cap, the returns are in excess of 100%. And that has been the key driver in terms of performance of the funds also in this category. The ones who have uh, had higher exposure to relatively higher exposure to small and mid cap stocks, they have basically improved their performance in the overall category.
Okay. Now, I presume because you're saying that it's a kind of a new category, which is why we don't have previous rankings for this category, Piyush, if I'm not wrong, in your letter, because I see, for example, is that the reason? And therefore, let's talk about the fund which has gotten the highest ranking and one of the funds which has gotten the lowest ranking. Now, PGIM India Flexicap Fund is ranked number 1. What parameters led to this? Why is it that it's standing out vis-a-vis a whole host of other funds which are there?
Yeah. So before I come to the fund, I'll also maybe elaborate on why we are considering it to be a new category. After the introduction of the new definition for multi-cap, there was recategorization of funds which happened. As far as this ranking is concerned, we have looked at all the funds which were part of erstwhile multi-cap category and which have got reclassified themselves into flexi-cap. And hence, we are not comparing the ranks of these funds with the previous quarter, given that the universe was different compared to the current quarter. So that is one bit. As far as PGIM India FlexiCap Fund is concerned, this is a fund which has been ranked 1 in the FlexiCap category. The key driver for the top rank for its top rank is the fact that it has outperformed the benchmark as well as the category over a 3 year period. Now, if you look at in the recent times, there are quite a few funds which have outperformed the benchmark. While there is an outperformance you will observe over a category average, the outperformance over the benchmark has been lower in terms of number of funds. So this is one of the funds which has actually outperformed the benchmark as well as the category average, both in the recent period as well as over a 3 year period. Now, one of the key factors for its outperformance has been the fact that the fund increased its allocation into small cap stock from 14% in the if you look at say August month portfolio last year compared to a 33% allocation in the recent portfolio, which is March 21 portfolio. Now, in the same period, what you'll find is these small caps have actually delivered significantly higher return compared to mid cap and large cap stocks. This has meant that the fund has actually improved its performance significantly compared to the benchmark as well as the category average. Even in terms of, I would say, concentration or diversification of the portfolio, while the fund has lesser number of stocks compared to category average, the fund has on an average 43 stocks in the last 9 months compared to a category average of 50 stocks. What has helped in its diversification is the fact that the allocation to each of the stocks have been more even and there is lesser skewness in this particular portfolio compared to the other funds which are there in this category.
Okay. So risk-adjusted returns have been good. They've done it for a 3 year period, and it's a very well diversified fund in the sense that allocation between stocks is done very well in that fund compared to
category. And it becomes an important parameter given the fact that the fund has increased its allocation to small and mid cap stocks, and there the diversification is a key factor because if you get your calls from the performance can deviate quite significantly. So even from the diversification perspective, the fund has a very well diversified portfolio compared to the PSL.
Okay. Just a word on the because it's ranked number one and Flexicap is a difficult category, so to say. Is the AUM making any kind of a difference to the performance or not? Not really.
I think the fund is relatively smaller, but it has seen an increase in AUM. I think it's almost doubled in the last 1 quarter. Having said that, it is still among the smallest fund in the category. It's about 600 odd crore fund. So to that extent, it is relatively a smaller fund.
But here's the other thing to keep in mind is that if you are investing in the fund and if you're getting your returns, how does it matter what the AUM is, as long as they are managing the risk well, which Piyush believes they are. Let's talk about the fund which is not unfortunately out there in the top rankings, but Motilal Oswal Flexicap Fund, which is ranked number 5.
Yeah.
Now, can you talk a bit about this famed house? They are known for stock picking, but they're ranked number 5 in your rankings.
Yeah,
at least this fund.
Yeah, so this particular fund, I think if I were to look at key takeaways from this fund, one is the fund has over a period of time maintained a very concentrated portfolio, and that's primarily because they probably focus on the stock selection more when it comes to portfolio construction. What has also happened is, given that it's a concentrated portfolio, the allocation to the across market capitalization in this particular fund has been more tilted towards the large cap universe, and uh, and it is higher than the category average, so which has meant that the allocation effect that you will typically see in terms of allocation across market capitalization, that is where it has been left out in terms of the overall performance.
Got it. Okay. Just one quick follow-up, and that will be true for all categories. But how easy or how regular could the factor of funds changing their rankings quite significantly occur, Piyush? Is it possible that the number one ranked fund, unless it does something dramatically different, can very quickly in the next month's ranking go to number 3 or thereabouts, or could a number 5 fund dramatically jump to number 1? Is that possible? Does it happen too regularly?
So I wouldn't say that it is not possible. There are few exceptional cases where the funds can move from 1 notch to 2 notches. 1 notch is something which will be more regular, but 2 notches is something which is less common. But there are times when if there is a significant movement in the market in a short period of time, and if the portfolio is positioned in a manner either favorably or unfavorably, can have an impact on the overall ranking of the fund.
Understood. Fair call. Let's now move to the category, Piyush, which is wherein a lot of people say that don't invest in active funds. When why pay those fees, because the funds are not able to do well. Can you talk about the large cap category, because I think you made a very important point on that phone call that we had, the kind of underperformance that the large cap funds have done.
Yeah, so I think large cap as a category, if you look at the funds which are present in this category, not many funds have been able to beat the market benchmark, which is Nifty 50, Nifty 100, or BSE Sensex, all of these indices. If I look at even the last 3-year performance, I think only 2 out of 28 odd funds which we have ranked have actually beaten the benchmark. So to that extent, there is the underperformance vis-a-vis the market benchmark. Now, there are a couple of factors. One is the large cap as a category has a very tight investment mandate. 80% of the portfolio has to be invested into large cap stocks. The investment universe is also very limited. You have 100 stocks to pick when it comes to portfolio construction. So to that extent, the ability of a fund manager to pick the right stock and then generate also goes down significantly, because the investment universe is relatively smaller compared to the other category. So that's been the key factor. The other thing is, if you don't get your stock selections correct, then it can underperform, because and in the large cap, what we have also seen is for the major part of last 3 years, the performance has been driven by few select stocks. So to that extent, if the fund doesn't have those stocks, and if they have an under exposure compared to the benchmark, the underperformance do come in. Other than that, funds also need to work with the stock level limits. So they can't have more than say 10% exposure to single stock. That may not be the case with the benchmark, right? You can have few stocks which are having higher weight compared to the 10% limit that with which the fund managers have to work with.
Okay, so let's talk about the first fund which has actually done well in this category, right? It's moved up its rankings from number 2 to number 1. Why has UTI managed to do that?
Yeah, so UTI, if I look at the performance of this fund, uh, it has improved its performance in the recent period. If I look at recent 9 months or 1 year performance, its return has been about 43 odd percent for a 9 month period and almost 69% for a 1 year period. But at the same time, when we look at a category average, the category average is about 39 and 62% respectively. So to that extent, the performance of this fund has been higher than the category in the recent period. Further, the fund has also maintained a higher performance even for a 3 year period. So the fund has delivered 13% return compared to a category average of 11%. So overall, if you see even the near term as well as over a medium term, the fund performance has been higher than the category average. So that's been one of the factors. Second is some of the stock selections which the fund has done, like Infosys, ICICI Bank, HDFC Bank, largely the large cap driven performance that we have observed, at least in this particular fund. So some of these large cap stocks have contributed positively to its overall performance in the period for which we are doing the ranking for these funds.
Okay, so that's as far as UTI goes. Now let's talk about the two funds which have actually not managed to do well. And Axis Blue Chip was considered to be pretty good. It slipped from the number 1 to the number 3 ranking. What's happened?
So Axis, like you rightly mentioned, has been one of the top performing fund in the large cap category, and not just for a fairly long period of time, right? It has done well. So hence, when we even look at its 3 year performance, it's still higher than the benchmark. What has not worked for Axis is the recent performance that we see in the Axis fund. If you look at its portfolio allocation over a period of time, it has been largely towards the large cap stocks and has taken very limited exposure to small and mid cap stocks, even for the 3 year period. And which meant that, at least when you look at initial 2 years of this ranking, what we find is the fund was doing really well, because at that time you saw large caps outperforming small and mid caps consistently during that period. What has happened in the recent period, in the last 9 months, it has shifted some of its cash holding, which it had in the last year around April and May, when there was a huge market correction. It gradually moved its allocation to large cap stocks. And it is one of the funds which has the highest allocation to large cap compared to all the funds within the category, which has meant that its overall performance has been lower than the category average, primarily because of its allocation to large cap as compared to some of the other funds which were largely which had relatively higher allocation to small and mid cap stocks.
Okay, and another fund which I think a few weeks back an advisor had come and said it's actually a big laggard in terms of returns in the large cap space is DSP 100. Can you talk a bit about that? Because I think it slipped further in rankings, or at least it's one of the lowest ranked funds within your rankings.
Yeah, so in fact, this is a fund which is ranked 5 in our overall ranking. We have a scale of 1 to 5, 1 being the highest and 5 being the lowest. In fact, it has slipped from 4 to 5 in the last quarter. The fund has been, like you rightly mentioned, has delivered lower return over a period of time. When we look at 3-year performance, it's only 9% compared to category average of 11%. So almost 2 percentage point difference there. Even in the recent period, the fund has delivered 36% in the 9-month period compared to a 39% over the same period of time by the category average. So in a way, the fund has been delivering weaker performance over a period of time. If I look at some of the stocks which has contributed negatively, these are largely, if I look at it, even though it's a large cap category, some of the mid caps have actually been its laggard in terms of the performance. For instance, the stocks like Ashok Leyland, Bharat Forge, IndusInd Bank, some of these stocks have actually contributed negatively to the overall performance, even in the recent period.
Okay, and which probably explains why the SP 100 has been a laggard, and not just the returns, of course, the risk-adjusted returns. It's ranked number 5 in the current rankings from CRISIL, on the latest rankings from CRISIL. Let me put it that way. They are the current ones. The category is large and mid cap. Now, again, the same things to watch out for when it comes to large and mid caps that you would watch out for large caps, or is there some difference there?
So I would say large cap is where stock selection is a key because there is very little leeway in terms of allocation, be it in terms of sectors as well as in terms of market cap. Large mid to some extent, there is some play which is there in terms of allocation across capitalization. And this is also visible when we look at recent portfolios. So over the last 9 months, again, the fund this particular category has seen a slight increase in the allocation towards small and mid cap compared to large cap, and in a way that also has been a driver in terms of performance of some of the funds in this particular category.
Is that why EDELWEISS has done what it has done? Because I see that in large and mid cap, there is a lot of changes in rankings, Piyush. So I think EDELWEISS has moved up from either number 3 or number 2 to number 1. Why is it that it's ranked number 1 in the category? Again, risk-adjusted returns, higher allocation to mid caps and small caps. Is that the reason?
Yeah. So in terms of allocation, of course, like you mentioned, has been higher for this particular fund into small and mid cap stocks, and which has meant that the performance has gone up significantly in the recent period, which has meant that there is an improvement in the overall ranking. Having said that, it has maintained its ranking as far as the volatility is concerned. So while the performance has improved, the volatility has not slipped for this particular fund, which meant that the performance of this fund in the overall ranking has gone up. Even from the perspective of diversification, while it's not among the top fund, but it is fairly diversified portfolio that we see compared to the overall category.
Okay, and what reasons for the laggard to do what it has done? I think Invesco is the one which is really low on the rankings.
Yeah, in fact, Invesco has come down significantly in terms of ranking. It was ranked 3 in the previous quarter. It has come down to 5 in this quarter. The performance in the recent period has actually dragged its performance by a significant margin. If I look at maybe a 3-year performance, the fund has not been very different from the category average. It's the recent performance in the last quarter and the 9 months where the fund has come down significantly in terms of performance. In this particular fund, I would say the stock selection has not gone right, and which has meant that the performance has deteriorated significantly. And we see some of the stocks, be it large cap or maybe mid cap, both the categories, you see that there are some laggards which is pulling down its performance.
Okay, and the last category, Piyush, is the value or the contra funds. Now, here's the interesting bit. What I found actually a bit intriguing, as for your rankings or otherwise, that most people would be of the opinion that in value or contra funds, what would matter is not the allocation to market cap, but the contra bet and the allocation that you do to particular bets which are out of favor. Are you saying that more than that, the market capitalization allocations have mattered in the recent rankings?
Yeah, in this category, again, it comes out quite clearly. When we look at, in fact, when you look at these two funds, ICICI Pru Value Discovery and IDFC Sterling, uh, we see IDFC Sterling, the performance has largely been driven by the small cap stocks, and it has increased its allocation to small cap stocks quite significantly, which meant that the performance has gone up for this fund and also resulted in improvement in the overall ranking. ICICI Pru, again, I would say the performance is, while there is slight decline in the recent period, but the fund has still a relatively better ranking, and it's largely driven by its 3-year performance. The fund has delivered 11% compared to category average of 8%.
And both of these have moved up from number 3 ranking to number 2 and number 1 respectively, which means both of them have had some qualitative parameters working very well for them.
Yeah, so in case of ICICI Pru, I don't think it is the market cap which has worked for him. It is largely the stock selection which has actually played out well for ICICI Value Discovery. In case of IDFC, it is largely the stock selection in the small cap space and mid cap space that has actually contributed to its performance.
Okay. Pish, now before we wrap up this piece, and of course we'll do the debt piece next week, how is it that these rankings would help investors? What is it that investors should do after they watch the show, when they read the story around this show as well, and they look at the rankings? What is it that by virtue of these rankings can help them in their investment making decision?
I think one of the key factors that we look at when we carry out these rankings is the consistency of performance. We make use of rolling returns to measure the performance of the funds over the last 3 years. And the funds which have done well consistently in the last 3 years tend to come on top. So that's one bit. Even otherwise also, when you are looking at these rankings, look at these rankings over a period of time. A fund which has maintained the consistency in ranking over the period of time are some of the funds that you can maybe look at.
That would help. Okay, Piyush, thank you so much for joining in today. It was a pleasure talking to you. Really appreciate. And we, of course, look forward to having you next week as well when we talk about the debt funds.
Sure. Look forward for next week interaction on the debt fund. Thank you for having me.
Well, the pleasure is ours. Thank you so much. And viewers, just keep in mind, viewers, that I think the point that Piyush was making was very important. Look at the consistency of the rankings. And that's what mutual fund investing is about. It's not necessarily about making the biggest bang for the buck or getting very high returns in 1 year and then low returns the next year. If you can make decent returns consistently, then you are home. And maybe that's what these rankings would help you in doing. As I said, next week we'll get in Piyush to talk about the debt category too, because that's an equally important category in everybody's portfolio. I hope all of you tune in for that as well. Thanks so much for joining in for this leg of the Mutual Fund Show.